Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning, so still the early part of the week. We're coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues as always, Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Morning, Nigel. So that's the big question, right, that we're asking. Will the market break out of its range after what we saw yesterday? And I guess the bulls are hopeful that that should happen.
The bulls will be hoping for a follow-through session because yesterday was a very, very good session. On the headline index, the small cap index was the very good performer. So what more did you want on a Monday?
And banks did very well, right?
Sure.
Although the performance I was seeing by the end of the day was not from the stocks like Reliance or HDFC Bank or ICICI Bank, which looked like, I mean, they would fire. They did not fire, but the market fired, which I think is, in any case, good. All right, let's just quickly take a quick look at what we need to start with. So not very much by way of global cues once again. So I think you can wrap it up in a sentence or two. Absolutely flat close for US markets, indices, S&P, NASDAQ. In a way, market is kind of waiting for catalysts on the horizon. There are two things. One is earnings. There are big earnings. 45% of the S&P 500 market cap will report earnings this week over the next 4 trading sessions, remaining 4 sessions. And number two, you got economic data, and a Fed decision as well. GDP and inflation numbers on Thursday and Friday, and then the FOMC meeting, which is going to be next week. So in a way, lots of catalysts, markets in the US not doing very much, not telling us one way or the other which way they want to break out. Here in India, after yesterday's move, the question is kind of emerging once again, is the market resuming the uptrend that we saw from the lows of last month? So we had a very strong 1,000-point up move, a week and a half or odd of consolidation, very quiet markets. And has that ended yesterday? That is the question. I think it's early to say with any conviction that that is the case. We need 1 or 2 days more of strong follow-through gains. We need a closing above the previous high. And that, I think, add confidence. So the Nifty yesterday ended with strong gains. We ended pretty much close to the high point of the day. On the way down, I mean, I think now the level for the market to hold is 17,554. That is a low from day before yesterday, and that should be held on the way down. That is point number 1. On the way up, and this is the level that we put out, the recent swing high, which is 17,863. That's not very far away, but 120, 130 points away. But that's the level to take out. A solid close above that, I think, gives us visibility that the market perhaps can do more from here. So these are Nifty levels. On the Bank Nifty, which is, as I was saying yesterday morning as well, there is a divergence. Banks are much stronger as compared to the Nifty. The Bank Nifty has broken above the previous high already. The previous high was 42,603. We left off at 42,635. So just about above that, but it was a close above that particular level. The next target is the 78.6% retracement of the entire fall on the Bank Nifty, which stands at 42,966. Again, about 350 odd points away from yesterday's close. So 42,966 is the next target, above which I think you'll get more visibility. And on the way down, I mean, if you want to sort of put some markers as a support around on the basis of which you want to trade, 42,962 perhaps could be that level. And that should not be breached if there is some selling which starts to emerge, at some point in the day. So that's basically a bunch of things out there for you to kind of track and pay attention to. Not very much from global markets. The market here in India, though, yesterday at least fired on the back of its own steam. Sonia.
Absolutely. So, the one question that's on everyone's mind, right? Will the market break out of its range? And it seems like there are catalysts which suggest that the market could break out of its range. Yesterday, we saw that the foreign selling by FIs have reduced quite a bit. So there was just about 400 crores of selling from the FIs yesterday. This compares to over 2,000 crores in the previous trading session. And on April 20th, we saw 1,300 crores of selling. So in that context, yesterday's 400 crores indicates that perhaps the FI sentiment towards India has improved. It may be too soon to tell, but at least that's one indicator. The DIIs, the domestic institutions, bought in excess of 1,100 crores, so that was a good thing. Now, after ICICI Bank's strong numbers, the stock moving up, there was delivery-based buying as well. A lot of earnings this week from the banking space, and all eyes will be on that. There's Axis Bank on Thursday, there's Kotak Mahindra Bank on Saturday, and the Bank Nifty has made its presence felt. So yesterday as well, the Bank Nifty ended with over 500 points gains. It's now well above the 42,000 mark. So let's see if these, stocks can take the market higher. Apart from that, since I'm talking about earnings, Globally, although the markets were very quiet, all eyes will be on a slew of numbers that come out in the next couple of days. Quiet in the sense there was a tinge of green on the global markets, but now the street will await numbers from Alphabet, Microsoft, Amazon, Meta. All of them will be announcing numbers through the course of the next 48 hours. And in local cues, talking about tech and big tech, there is Persistent Systems that reported a decent set of numbers. So after Mastech, you had Persistent Systems. Almost 4% growth is what we've seen in terms of dollar revenues. The margins were stable quarter on quarter in a challenging environment, and that's something that the street would definitely like. There is the auto space that will be in focus today as well. Bajaj Auto kicks off today. There's Maruti tomorrow. And some of these stocks like Bajaj Auto are at a 52-week high. So I'm going to be tracking that space very, very closely. But in general, the mood is positive. The SGX Nifty is indicating that after yesterday's good run, there will be some follow through today. But it's important to see if that 17,800 hurdle is something that the market can take out.
Well, that's right. So now the SGX Nifty is suggesting a positive start. Of just looking at the Asian markets, though most of them are in the red, which is not such a bad thing because you want the follow-through session to start off a little bit flattish, a little bit lower so you can get in. The data points, though, that are coming in are telling you that this is a buy on dips market, at least in the near term. Yesterday, the Nifty bank or the banks, they broke out and the IT index provided some good support. So that was pretty good news in trade yesterday. And the Nifty bank closed at its highest levels we've seen in the last 3 months or so. The institutional data and the cash market and the FI data and the FNO market, both of them were very, very encouraging. Today, though, the Nifty Financial Services Index, that's the one that's going to be the swing factor. And also, I'll be keeping an eye out on the small cap index because yesterday, that was a pleasant surprise. It rebounded well in the second half of trade. Let's focus first on the cash market flows. The FIs, well, the net sell number that Sonia mentioned yesterday was half of what we've seen on an average for the last 5 sessions. So on an average, it was around 900, 950 crores odd. The institutional numbers, well, that's a net. DI and the FI put it together. They turned buyers because the DI flows were stronger than expected after 6 straight sessions of selling. The FIs in the FNO market, well, they added 10,000 long contracts and they covered close to around 2,000 short contracts. Now the long positioning moves to around 44%. That's the highest we have seen in the last 3 months. Around January 24th is when the FIs were net long on the index. And after that, we haven't seen them come to this level of around 44% odd. So that's telling you a lot of the short covering bounce has been done. And now maybe the FIs are playing for more upside. Now, on the index option side, what stands out is they added longs and they also wrote puts very, very aggressively. Yesterday, they wrote more than 2 lakh put contracts in the ratio of 10 puts for 1 call. And pull up a couple of strikes. The Nifty, 17,700 put, 17,600 put. Between them, close to around 75 lakh shares were getting added out there. So because of that writing that we've seen added around that 17,700 as well as the 17,600 put, now the base of the market in the near term, we have expiry that plays out in the next few days. That's moved up to around 17,600, 17,650. Earlier, we were tracking 17,500 to around 17,550. On the upside, you're watching for the 100 DMA. If the Nifty can get closer to those levels, then you're bracing for a rebound towards that 18,000 odd mark. But I said the Nifty Financial Services Index, that's going to be crucial today. There was some writing over there as well. Normally not very, very active, but today's expiry, 18,900 put, very, very active yesterday. There was some writing being seen. At one point of time, it was more than 100 rupees. So just plugging in those numbers, you get some bit of support at around that 18,785. Watch that level because the second half of trade is going to belong. SGX Nifty suggesting some green. I think at some point of time, you'll get a bit of a dip. You need to participate going by the data points. So buy on dips is likely to continue, at least in the near term.
All right. Now on the SGX, 17,777 is where we are trading on the index at. Well, let me quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. And Matt Orton at Raymond James Investment will join us to discuss the global setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we do a quick fundamental stock check with Himang Jani of Motilal Oswal Financial Services.
Okay, well, first up, let's get you some views coming in this morning. We have Rupal Agarwal of Bernstein, who remains constructive on Asia, given better macro environment and valuation support compared to developed markets. However, she adds that as risk of a global recession increases along with geopolitical best idea for Q1 of 2023, outperforming the market by 9% in the quarter. She now believes it is time to take profits on trade, and this is an expression of their reduced risk-on stance in Asia. She now recommends chasing past setting them well for a reversal. She maintains their preference towards high-yielding names as a recession hedge.
Okay, well, this is on money markets. Abhishek Goenka behind US and US data suggesting sticky core inflation. The Fed is expected to sound hawkish with a 25 basis point hike imminent and mostly priced in. He says it will be interesting to see later cuts with hawkish commentary. He says they remain biased towards the US dollar weakness, expecting the dollar eventually break the 100 level. The rupee, he says, is expected to be stable with a slight appreciation bias to a dollar range over the next few weeks.
All right, and on the bonds, Ajay Magnolia of JM Financial says falling commodity prices, softening yields, moderate crude levels and receding. He says demand for paper seem to be outpacing supply, and in the absence of any major event, the market is fairly divided and convinced of the long pause. He says currency appreciation led by inflows from trading in a narrow range, biased with attempt to continue the rally. He expects the 10-year benchmark bond yield to trade in a range of 7.07 to 7.13% for the day.
Special Top 10 segment. Well, we're looking at Persistent Systems, Unichem Laboratories, Mahindra Logistics, Nelco, and IIFL Securities. Those 5 on our radar on the back of positive news flow. Consumer, that is, Mahindra Logistics, as well as Century Textiles, they could be reacting to negative news flow overnight.
Okay, Matt Orton is Chief Market Strategist at Raymond James Investment. He's joining us right now to take that the market in the US is kind of waiting in wait and watch because of all of the large earnings and more. And then you got some inflation data later this week, and then the Fed decides next week. Matt, what's the least path of resistance for markets?
Hey, Prashant. Weeks, U.S. equity have essentially gone no place. They didn't really go any place today. Expect going forward, unless we see really, really strong upside from the mega cap, we likely tread water again. You know, markets are trading towards the upper end of their range. I wouldn't be surprised of weakness, especially if results are mediocre or just hit expectations. Guidance isn't that exciting from some of the names that report. So in the absence of any really positive news, I think markets trade sideways to down. And frankly, the biggest risk I've been talking about with clients on U.S. equities is the Fed, and it's this disconnect that the market has between where its pricing rate cuts and where the Fed is likely to go. I fully expect us to get a 25 basis point hike next week at the May meeting, and the Fed to emphasize that higher for longer really means higher for longer. And so when you look at the trade and technology so far this year, and particularly the mega caps that have contributed about 80% of the market gains to the S&P 500, a lot of that is predicated on rate cuts. And so to me, it makes sense to be defensive. Don't chase the market higher, lean into quality, and there's going to be better opportunities, but right now is not the time to be waiting in.
Okay, so expect a 25 basis points rate hike at the next Fed meeting. Better to be defensive and stay a bit cautious. Matt, hi, good morning. Is that your view on the Indian markets as well? Because the tide is turning here, or at least that's the narrative. The worst of the fall perhaps could be behind us because we're getting good quality earnings, especially from leading sectors like banks. Your thoughts?
Yeah, good morning, Sonia. And it's not the case for India. You know, India has been an area I liked in emerging markets last year. I've been a little bit reticent towards India over the past couple of months, but I like the constructive price action. I like the fact that we're starting to see more positive earnings momentum and good results. And banks have been an area that I've liked for a while. And I think with India, the fact that the trend of higher lows remains intact, I think that's very, very encouraging. I think the one challenge to Indian equities is going to be IT services. Infosys didn't do any help when they reported earnings last week, but barring that, I think there's a lot of positives for the overall market. And so I'm encouraged by the price action in India. And so I am changing my tune there.
All right. And Matt, just to reconfirm, I think the last time we chatted as well, you said India gets preference over China. So do you hold on to that view? And also, I think you'd also briefly mentioned that maybe the weakness in IT services could be a good entry opportunity. Were Infosys numbers too bad now? Would you change your stance? So I wanted your view.
Hey, Nigel, good to see you. And I certainly prefer India over China. That's definitely been consistent. I still prefer emerging Asia over India, so countries like Indonesia, the Philippines, Taiwan, South Korea, but it's marginal. India is certainly growing because a lot of those Asian countries have appreciated. They've done very, very well this year, and particularly the leverage to semiconductors. I think a lot of that's more fully priced in. So it's a marginal preference, but if the price action in India can remain constructive, I think I'll probably move India up to the top. So we'll see over the next week how earnings play out in the Indian market. And within IT services, I mean, the results for Infosys just weren't good. But I think when you look at it as a whole, they weren't surprisingly disappointing. I think the biggest challenge, and it speaks to the broader industry as a whole, is that the concerns, the economic concerns around the rest of the world are going to be a challenge, particularly in asset management and financial services to which the company is levered. So in the near term, I think it might be a little bit too early to be bottom fishing in IT services, but I would say medium term. So after the next quarter, hopefully we can see the earnings cycle start to bottom. And as a lot of these companies start to cost cut, I mean, they've been investing in growth for the past couple of years. As you start to see cost cuts come in, demand rebound in the developed world, especially as wage inflation continues to be an issue, I think you're going to see earnings change as well.
Okay, so you're saying that it's too early to perhaps bottom fish in the IT space. That's because there is no clarity on earnings. What about banks? Before we let you go, is that a big yes from you, especially the likes of ICICI Bank? I mean, we've got some stellar numbers coming through.
We do, and so I wouldn't even say we're bottom fishing in banks because they've done well relative to the rest of the market. And I think banks continue to look attractive. It's encouraging because when you look at the opportunity in financials in India and really other emerging markets relative to the US and Europe, there's a much more positive backdrop. And I think within Indian banks in particular, the backdrop of solid ROE, expanding loan books, net interest margin, all of that is encouraging, and I think that can be kept up. So when you add the guidance that we've received from companies that have already reported, I think that's a space that you want to continue to be invested in. And if you're not invested there, I would consider getting in because I think the strength is going to continue.
All right, Matt, we leave it there. It's a pleasure, as always, speaking with you and having you with us here on the program today. Thank you. Matt Orton at Raymond James Investment Management. Well, we'll take a very quick commercial break here. Our list of top stocks to watch lined up next with our research team.
Welcome back. Today promises to be another good start to trade, and yesterday was a good day. So let's see, a lot of stocks to talk about this morning. Our entire team is joining in to help us with that list. As I was telling you earlier, after Mastech's good quality numbers, now you have Persistent delivering a decent set of numbers as well. So Rima is here to tell us more about that. Rima, morning.
Thanks so much for that. Mastech and even Science, Sonia, was actually a pretty decent set of numbers, and now Persistent has delivered a good quarter. A dollar revenue growth of 3.5%. This is in line with street expectation. Margins are flat at 15.5%, something that the street was anticipating. A constant currency revenue growth of 3.5% for FY23. They have ended with a growth of 35%. And with this, they've hit an annual revenue run rate of $1 billion. And consequently, the company has announced a special dividend of 10 rupees per share, which is over and above the final dividend of 12 rupees per share. The other internals are also looking healthy. The total deal wins are strong at well over $400 million. The attrition is trending down and now below the 20% mark. So while you would say the numbers are in line with expectations, in an uncertain environment, in line is also very good. And the basic numbers, the absolute numbers itself, look pretty strong, with a constant currency revenue growth of 3.5% for Q4, and for the full year, a 35% top-line growth. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, let's move to the next stock. Ekta joins us to tell us about the big deal that was announced late last evening, and Nimesh had given us a heads up about that as well. Ekta, go ahead. How do you expect IPCA and Unichem to react today?
Well, yes, it's definitely a very newsy deal, and with this, Unichem has exited the pharmaceutical business. The promoters, rather, have exited the pharmaceutical business. The news is that IPCA Labs is going to buy 33.38% stake in Unichem from the promoter at 440 rupees per share, which will total to around 1,034 crores. IPCA will buy an additional 26% stake via an open offer, which is priced at 440, so that would come up to around 805 crores. The purchase price of around 440 is a 13% premium to Unichem's closing price yesterday. Now, what exactly does Unichem bring to the table for IPCA Labs that they're shelling out this kind of money? Remember, Unichem sold their domestic business in 2017 to Torrent Pharma for 3,600 crores. After that, they just had their international formulation business left with them. Now, 55% of Unichem's international business comes from the US, which is, and they have 3 formulation facilities, 3 API facilities. All their US FDA facilities, or rather facilities which are inspected by the US FDA, are compliant. Now, IPCA has had 3 US facilities which have been under the US FDA scanner all the way since 2015. So that's exactly where the gap is for IPCA, which they will probably be filling with this Unichem acquisition. The negatives is that Unichem's business has only been growing at low single digits in the past 4 to 5 years. They made an EBITDA loss as of 9 months FY23. Also, their arm Niche Generics has a pending fine from the European Commission. Valuations annualizing the 9-month acquisition is done at an enterprise value of around 2.5 times revenue, and according to brokerages, they're paying a high valuation for a loss-making asset, which is expensive. That's the reason I expect IPCA to be in the red today. Unichem could see some upside.
All right, nice wrap out, Ekta. Thanks very much for that. So both stocks we'll keep an eye out on as markets open. UPL and Mahindra Life are the next stocks in focus. Sonal has got details. Sonal, morning.
Good morning, Prashant. Let me start with UPL. That will be in focus because global agrochemical major, that is Adama, they have reported their Q1 2023 earnings, and they did not look so good. They saw a revenue decline of 11% to come in at around $1,259 million. The EBITDA was down 18%. Profits were up, but that was because of an adjustment as well. Now, this company has the same geographies that UPL caters to as well. That's Europe, Latin America, and North America as well. In its commentary, the company said that Q1 continued to see decline in crop prices. If crop prices are higher, it is beneficial for these agrochemical companies, but they did decline in Q1. Quarter also saw early purchase due to product availability concerns and supply shortages, so the inventory was changed in that way. But customers are still in a wait-and-see approach for crop protection purchases, and that's why some of them have been deferred according to the company. And this is something that UPL and other agrochemical companies which have global exposure could also see in our own markets. So that is about UPL. For Mahindra Life Spaces, it is a positive news. It is the second redevelopment project that the company has bagged. This one is for a society in suburban Mumbai in Malad, and the total revenue potential of this one is 800 crore rupees. So redevelopment also heating up. Mahindra Life Spaces in focus on the back of that. Okay, thanks a lot for that. Well, let's go across to Surbi. She's tracking Crompton Consumer this morning. Surbi, why are you watching that one?
Thanks so much for that. So Crompton is on my radar as the company announced a realignment in their top management. Now, firstly, Promeet Ghosh will be taking over as MD and CEO, as Mr. Matthew Job has resigned from his post as CEO and Executive Director. Now, Promeet Ghosh was the deputy head at Temasek India for almost 10 years. He's also served as a non-executive director on Crompton's board for 6 years and Schneider Electric's board for almost 2 years. Now, there are concerns on the street that he lacks experience to run an electrical business, but on the positive side, he has been on the company's board for almost 6 years. The next changes, Mr. Shantanu Goshla, who was previously the MD, has now been appointed as the Executive Vice Chairman for 1 year. This is with effect on 1st May 2023, and thereafter he will be serving as a non-executive Vice Chairman till December of 2025.
All right, Surabhi, thanks very much. And this is another one which will be interesting to watch. How does the market treat all of these changes right as the word go, and then, important to track through the course of the day. Well, back to Rima. Nelco and Tata Teleservices have also got news flow. Rima.
Thanks so much for that. Actually, I'm looking at Mahindra Logistics now, where the company has reported the Q4 numbers, and it's the full integration of the Rivigo acquisition which is boosting the numbers. This company was acquired in November of 2022, as a result of which the revenues are up 17%, margins have expanded to 5%, but there is a loss of about 82 lakh at the bottom line on account of higher depreciation and finance costs associated with the acquisition. Nelco is the other one. Looks like a stable set of numbers. A year-on-year revenue growth of 14%, margins have expanded to more than 20%, and the bottom line is up 87%. Quarter-on-quarter too, the numbers look stable, 10% top-line growth, EBITDA margins of 150 basis points, and a profit jump of 13%. So stable numbers coming in from Nelco. Back to you.
Thanks a lot for that, Rima. Well, Surabhi joins us to tell us about some Q4 numbers as well as some stocks that are in the news. Surabhi?
Thanks for that. So I'm watching out for Century Textiles. The numbers were quite muted. The revenue was flat at 1209 crores. The company did see a gross profit margin expansion of 500 basis points, came in at around 43% versus 38%. But the EBITDA was down 3% at 121 crores. This was due to higher freight charges and other expenses. The EBITDA margin was constant at around 10%. The company did report an exceptional item of 134 crores on reassignment of leasehold land in Gujarat. Now, looking at the segmental performance, the only silver lining here is the revenue growth in the paper and pulp businesses. In the textile business, the revenue was down 27% on a year-on-year basis. In the paper and pulp business, the revenue was up 10% at 910 crores. And in the real estate business, the revenue growth was muted, up only about 1%. Moving on to IIFL Securities, the company reported a good set of numbers on a sequential basis. The revenue was up 18%, the operating profit was up 31%, the margins came in at 38% versus 34%, the PBT was up 40% sequentially, and the PAT was up 34% sequentially.
All right, Surabhi, thanks a lot for that. And in fact, thanks to our entire research team. In case you missed out on any of these stocks, here's a quick recap. Stocks with positive news flow: there's Persistent Systems, Unichem Laboratories, Mahindra Lifespace, Nelco, IIFL Securities, and Mahindra Logistics. While stocks with negative news flow, there's Ipca Laboratories, UPL, Crompton Greaves Consumer, and Century Textiles. But let's also get a handle on what's happening in the world of commodities. Manisha Gupta joins in. Manisha, what's the action been there overnight?
Thank you for that, Sonia. Well, I'm looking at the crude oil prices, which is holding its support levels. The pullback in the US dollar index has been supportive, and the markets are now betting on the Golden Week holiday in China, and that perhaps will drive the fuel demand. Markets also are looking at signs of shrinking refining margins in Asia, and that seems to be weighing onto the prices. So we seem to be getting stuck in a very tight range as far as crude is concerned. But further decline is what we are witnessing in the metal prices. With recession fears prompted by high rates, you have copper now trading at a 2-week close. Zinc has declined even more. That one is trading at a 2-year lows right now. And we did see nickel and tin prices hit a 2-month highs, but both of these metals also have come off from there. It is all going to be about the first quarter GDP data from US that gets released today. Further direction would come in from that.
Okay, Manisha, thank you very much for that. We'll come back to you for more on commodities. We'll take a very quick break here. Hemang Jani of Motilal Oswal Financial Services will join in for some fundamental stock check. Lots of these individual names to discuss, and a few deals, a management reshuffle. So we'll discuss all of that. A little later, we'll also have an analyst from Nuvama Institutional Equities joining in. So that's coming up a little later on the show. Stay with us.
Well, today is a big day for the auto space because we kickstart auto numbers with Bajaj Auto later in the afternoon and Maruti tomorrow. According to a Nuvama report, demand momentum for the sector has been strong and will continue to improve. Nuvama, in fact, expects a 10% volume growth in FY24. Raghunandan NL, the director at Nuvama Institutional Equities, joins us now to talk about that. Raghunandan, good morning and thanks a lot for joining in. First, before I ask you about your own report, which is quite bullish on the sector, I wanted your thoughts on Bajaj Auto. The stock is at a 52-week high. It's done very well this year, but the numbers are not expected to be that good considering that exports have been under pressure. How are you positioned here and what's your outlook as we head into the next few quarters?
Good morning. Thanks for having me on the show. On Bajaj, firstly, taking up the positives, the domestic two-wheeler industry has been in an upcycle. It has seen a good growth in FY23 after seeing 3 years of decline. And we expect Bajaj to ride this upcycle even going forward. And we expect two-wheeler industry to recover to the previous peak only by FY27. So there is a long growth runway and Bajaj will be a part of it. In terms of exports, it has been a weak spot for the company and we expect next few quarters also to see muted performance. Q1 and Q2 of FY24, we still expect exports to be on the negative side for Bajaj. And second half of FY24, on a low base, we expect some recovery. In terms of our view on Bajaj, we have a neutral view. We think in terms of overall volume performance, Bajaj is likely to see underperformance versus peers such as TVS Motors and Eicher Motors, mainly because of high exposure to export markets.
Okay. So you have a neutral view on Bajaj Auto, but you believe that the momentum is picking up in the domestic market and Bajaj Auto could ride on that. Got it. I was going through your report where you say that the auto demand momentum has been very strong. There's good replacement demand, there are new products, etc. But there is also this niggling worry about the monsoons, the erratic weather and the impact that could have on rural markets, right? So tell us a little bit about what your prognosis is and what are the top stocks that you're bullish on now in the auto space?
Yeah. With reference to the worry of El Nino, if you look at last 20 years, there has been 6 instances of El Nino. And in that, there have been only 2 instances where auto, especially tractor volumes, were impacted. And these 2 instances were severe El Nino kind of situations wherein the monsoon deficit was more than 10%. And also there were other factors which did not play out favorably. What I'm trying to say is agri crop prices, agri credit availability, government support, these factors can influence and lead to a positive volume growth despite there being a marginal miss on the monsoon side. So even in FY24, we are expecting tractor industry to see a positive growth despite worries of El Nino. And Q1 of FY24 is likely to see double-digit growth. And this itself will support full year performance of a marginal growth as per our thoughts. In terms of our top picks in the sector, the top 3 buys we have is Tata Motors, Samvardhana Motherson and Maruti Suzuki. In terms of our top sell, it is Bharat Forge.
Okay. Since you spoke about Maruti Suzuki being one of your top buys, I just wanted to talk a little bit more about that. The pricing of the Fronx was revealed and, the big story is that Maruti will regain a lot of market share because of its, its SUV launches. But the stock has not done anything this year. So far, it's absolutely flat. What do you think would be the big trigger for Maruti and what are you expecting in this quarter's earnings which come out tomorrow?
The triggers will be on the market share and volume side. Last year, we saw that SUV market share was at 20%. This year, considering 3 new products, Grand Vitara, Fronx and Jimny, we expect market share in the SUV space to go up to 25% and that will drive up the overall market share towards 45-46% from 43% last year. The thought process is Grand Vitara, Fronx and Jimny together can do a volume of around 190,000 in FY24 versus Grand Vitara volume around 50,000 in FY23. So a delta of 150,000 units are coming in mainly because of these three new products. In other words, in our assumption of about 9 to 10% volume growth in FY24, only 2% is the growth we have factored for existing models, and the remaining growth is coming in from new product launches. So market share gain should be the main trigger for Maruti to do well. Coming on to the result expectation, we expect a good number for company. Revenue growth of 21%, going up to 32,000 crores, and profits should be much stronger at 48% growth YOY, going to 2,700 crores.
Okay, got that.
EBITDA margin,
very quickly, Raghunandan, got it. We got the gist of it. So Maruti is one of your top picks. Very quickly, before we let you go, your thoughts on Tata Motors. I agree that it's been a great performer this year, almost a 25% rise. But whenever it gets to that 450, 500 level, there's some negative news flow, something happens in the earnings, and it gets back into that range. Do you think this could be the year when Tata Motors breaks out of that 500 rupee upside?
We hope so. Tata has seen 3-4 years of losses, and third quarter it saw a turnaround with profits, and fourth quarter we expect a very strong quarter for the company. And going forward, for us the key monitorable will be Jaguar Land Rover's performance. Volume has been strong at 95,000 units for Q4, and going forward we think that doing a volume of 95,000 1 lakh units per quarter is possible, and for the full year volumes can be as strong as 370,000 to 4 lakhs. So this higher volume growth in Jaguar Land Rover, including margin expansion, EBIT margin consensus is building about 5% for FY25, that could see upgrades. So strong volume performance, strong margin performance, and debt reduction should be the drivers ahead. And our estimate is 11% higher than consensus, and we expect street estimates to be upgraded.
All right. Thanks a lot, Raghunandan, for joining in and giving us your view on the auto space. We look forward to chatting up with you rather soon to get your insights, post the numbers as well. Well, let's move on and discuss the other stocks that are on the news today. Hemang Jani, a retail equity strategist at Motilal Oswal Financial Services, joins us on the show. Hi, Hemang. Morning. Thanks so much for joining in. Well, we have a pharma deal that was announced yesterday post-market close. IPCA is going to be going and buying out the residual business of Unichem. For Unichem, I guess for those shareholders, given the open offer, the price, etc., it will be positive. But for IPCA, the read-through is a little bit negative. Your view on both these two stocks and on the deal?
Yeah, good morning, Nigel. I think, at this point of time, it's not very clear to us as to what was the rationale for IPCA to go out and, acquire Unichem. One possible reason could be that, they have some sort of import issues, from their existing domestic plants. And since this plant was available to them, which was US FDA approved, they could have probably acquired it. But typically it takes far too longer time to get that operational activity going on and start the, business. So clearly, this could be a case of some sort of a misallocation of capital. And we think that this would be viewed negatively by the market. Anyway, IPCA had its own issues, because of this, import alert and the fact that there was a bit of a slowdown in terms of earnings. So we would rather go with some of the other, domestic-oriented companies, maybe something like Ajanta Pharma or Alchem Lab versus IPCA at this point of time.
Hemang, the other one is Crompton. If you want to come in, if you've seen the changes which have happened, again, there is a little bit of skepticism about the changes at the top. and the person who's coming in, it's again one of those names which has done very poorly. The high on Crompton was about 500 rupees. It's under 300 now. What's your sense?
So Prashant, we would really want to see how this entire transition pans out. Also, if you look at the numbers, Crompton, despite having a very strong brand and their intention to expand the category, the numbers have not been that great. So we're not in a hurry to kind of go out and buy any of these names unless we get a comfort on the numbers and the valuations both. We have many more options when it comes to the mid cap and small cap category. So at the moment, we would avoid that.
Okay. There's actually some very interesting trends in the mid-cap IT space, right? So while the large caps are sulking a bit, the earnings have been pretty good in mid-caps, whether it was Cyient, Mastech, and now even Persistent Systems. Would you buy any of these names or anything else that you like here?
So Sonia, yes, it has come surely as a silver lining for the IT sector, where we had some major disappointment from Infosys. TCS also was a bit subdued. So there has been some sort of positive rub-off across some of the smaller IT companies. But I think within the names that we discussed, I think Cyient is something that stands out, where we had a very strong beat. The valuation comfort is high. Persistent numbers have been good, but there is an issue of single client concentration, and a large part of the quarter-on-quarter growth is coming from IBM. So we have to exclude that and see how the growth would look like. So I think, yes, some of the mid-cap IT companies can do well. Cyient and Zensar are the names that we like at this point of time.
All right, Hemang, normally we see either Ultratech Cement or we have, ACC Ambuja. They come out with their numbers first from the cement pack. This time around, Dalmia Bharat, they have turned things around. I think for the many, many years, I've never seen them report numbers first. What's your view on the cement space? I ask you this because input costs are cooling off. The problem is price increases are not happening. So what's your take?
So yes, I think because of the way the raw material prices have come off, some of these companies could report a better margins. Also, we think that somewhere as you see the capacity utilization improve, there is going to be some impact of the operating leverage. So we do like Ultratech in the large cap. We do like Dalmia and some of the other mid-cap companies like JK Cement. And we think that given the thrust of the government, the real estate sector, as we all can see from the commentary, they are looking quite upbeat. So I think cement as a sector should do well because of the combination of better growth outlook and raw material prices cooling off.
The other stock I wanted to ask you about was Maruti. I mean, we were just having this discussion, so it's kind of top of mind. But yesterday they announced prices for their new SUV, which is the entry-level SUV Fronx, and it's quite decent. I mean, it's a sub 8 lakh model that they're looking at. 7.46 lakhs is the starting price, and they're looking to get into this SUV space very aggressively now. Could that be the big trigger for Maruti this year, Hemang? And is the risk reward favorable for investors?
I do think that given the way the management has bounced back with the slew of launches in the compact SUV category and the kind of response that they have got, surely things are looking better. The numbers, monthly numbers, since you're closely tracking, I think Maruti has reported relatively better numbers, and we think that despite a very strong 2 years, this year again is going to be very good for passenger vehicle category, despite the competition that you see from Tata Motors and whole host of companies which are launching products. So I think Maruti by and large should do pretty well. The stock has actually practically gone nowhere. So I think from a risk reward point of view, it is looking quite compelling to us.
By the way, Hemang, any thoughts on real estate? We had the management of Loda yesterday with us in the morning, and they, what stood out was their confidence that this is just year 2 or 3 if what they see is a slightly longish real estate cycle, longer than usual is what they put it as. And they said, well, there are 2 reasons. One is supply is consolidated with fewer players, and there is an uptick in demand, of course. What's your sense?
So Prashant, I heard that interview and I was a bit surprised that, they're talking about such a long cycle, of 10, 15 years. I don't think, any management would have that kind of visibility of 10 to 15 years. But I think what is important, Prashant, is that given the way the interest rates have moved up, and the fact that though the real estate numbers, sales numbers have been good, but we have to see the profitability and versus expectations, how the numbers are panning out. So we are quite positive actually from a medium-term perspective. So Lodha, some of the Bangalore-based companies, having seen a correction, and the fact that there's a repo rate, there's a pause and maybe interest rates could head down. I think those are definitely positive triggers. So we would have a positive view there.
Okay, all right, Hemang, just stay on. We have many more questions for you, but it's also almost 9 a.m. and we have to talk about the technicals of the market. So let's take a quick break on that note. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in. So stay tuned for that.
All right. Welcome back. You're with us here on Bazaar Morning Call. The SGX Nifty will come up on your screen. Let's take a quick look at what it is indicating. 8-point change. So 17,767 odd is where we are at. Mitesh and Sudarshan are with us with what they make of the market. Gentlemen, good morning. Good to have both of you here. Sudarshan, how would you rate yesterday's close, almost at the day's high? Would you say that the week-long or sideways consolidation perhaps is ending and we are entering the next phase higher? Would you consider this a break or you'd wait for more confirmations?
Yeah, good morning, Prashant. I would consider this as a resumption of the uptrend. As I explained earlier many times, the market moves up, then it consolidates. I'm assuming that the process of consolidation, whether it was a week or 10 days, is complete yesterday. Market had a very decent rally on the upside. But I also feel that the rally this time will be choppy because last time we had a straight line rally and this time it should be an alternate of that, which means markets will go up, come down, go up, come down. It won't be a one-way street. So the trade continues to stay on the long side of the market. We are in an uptrend and that uptrend should see higher levels, but wait patiently every time to buy on dips because it's going to be choppy.
Okay, it's going to be choppy, so that's perhaps going to be the order of the day. Mitesh Thakkar joins in. Mitesh, what do you think? I mean, yesterday was a good day. Could there be follow-on buying now? Because the market has found leadership in banks. You think that could be that could lead the next leg of the move on the upside?
Good morning. I think that should definitely be an important factor. The Fin Nifty chart and the Bank Nifty chart both are looking very interesting and strong. The individual charts, particularly stocks like ICICI Bank, Axis Bank, Orton Bank, HDFC Bank, which form a good part of the Bank Nifty, also looking very strong. So I think the Nifty, as we were advocating that they could consolidate and then pick up steam. I think that picking up movement on the uptrend has started again. We should at least test 17,820 and possibly this time get to about 17,970, 18,000 zones. And on the downside, I think as long as 17,650 does not break, I'll maintain a long bias. So very clearly, trade on the long side with more emphasis on the financials and the banking stocks.
All right, got it. Mitesh, what about individual stocks? You've told us a few names out there from the banking names, but individual stocks, if you could tell us?
Yeah. So on my list today, I have all buy calls. Canfin Home Finance is a buy with a stop at 569, targets of 600 here. Bank of Baroda is a buy. Keep the stop at 177, look for target of 187. IDFC Limited is a buy with a stop at 82 for targets of 88.5. And one software or IT name, that's Oracle Finance, that's a buy with a stop at 33.75 for targets of 35.25.
Okay, and Sudarshan, what about you? What would be your stock ideas for the day?
Well, they're mainly on the buy side. So we'll start with ABB. ABB seems to have completed a correction. Buy with a stop under 31.60. Then we have BHEL. BHEL has already been in a rally. A small sideways move may end and the resumption of uptrend is likely. Buy with a stop under 75. My only intraday short is, Biocon. Biocon is suggesting that what the rally was probably a bear market rally and looking at lower levels. Intraday short with a stop above 230. And finally, Manappuram is a buy. It's been sideways after a rally. That sideways consolidation sometimes is a correction. And that's a strong sign of a big uptrend. So buy with a stop under 124.
Okay, well, Biocon is in news as well, isn't it? Mitesh and Sudarshan, thank you very much for joining us. And we'll take a quick commercial break here. 5 minutes to go for the pre-open session. We'll be joined by a couple of corporates. Ami Organics will join in to talk to us about their new foray. And perhaps we'll be speaking with the management of Biocon as well. Stay with us.